What's up everyone, it's Connie with MoneyVest. So in this video, we are going to be talking about Nvidia stock, and it's finally time for us to essentially do a full-blown analysis on the company to better figure out what is the future looking like for this stock here, now trading at almost $970 a share. Of course, the market cap is well over $2 trillion, valued at a very, very, very rich sort of market cap, has seen significant amount of progress in a very short period of time. So I'm going to do a complete analysis based on a bear case, base case, and bull case scenario for Nvidia for the next 7 years by the year 2030 and what that price target and intrinsic value is going to look like. So sit back, enjoy, relax, grab a coffee, grab a tea, whatever you need to feel comfortable, but we are going to be doing a complete analysis on this stock. As always, if you enjoyed this video and find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the members-only private videos, including all the trade alerts and the trade ideas, as well as options alerts and our newsletters and the moneyvest.com website. Links going to be down below. There is a discount, like I said, that expires at the end of this month. Now, I do want to point out to some preliminary analysis from Professor Demodran as well. When it comes to valuation, there is no better person that I can think of to better help us understand whether a stock or the indices or just whatever instrument or asset class you're looking at, whether it's overvalued or undervalued, because Professor Demodran has been a teacher on YouTube, of course, producing a lot of content, and he has a lot of specific models to better understand whether a stock or an index is overvalued, undervalued, fairly valued. Now, in all of the Magnificent Seven stocks, he mentioned that Nvidia is the one that kind of stands apart a lot, and in fact the most, being very, very expensive and quote-unquote overvalued. This is a video from 3 weeks ago, and if you basically read further or essentially watch this video, these are some of the notes that I've basically taken. But before I get there, Nvidia is a contradiction, a good trade, but a bad investment, is what he said. Consensus forming that Jensen Huang is the greatest CEO to walk the face of the earth and that Nvidia is unstoppable. But long term, the same forces that make Nvidia a good trade will work against you, with expectations set so high it becomes difficult to trade them. And these right here are some of the things that he essentially mentioned in that video. Now, this is in no shape or form to kind of, start off on a narrative that Nvidia is overvalued and it's a bad company. By no means. It essentially is to help you better understand what we're dealing with, because Nvidia, as we already know, has been just an absolute stellar when it comes to performance. I mean, since 1999, last 25 years, this stock is up 314,000%. I mean, we're talking 314,000% gain, all the way from, just under about 30 cents per share to now sitting at well over $945 per share. This right here is a gain from back in 2009, so right after the dot-com bubble burst. We did see, of course, a significant sell-off over here for Nvidia, and since then it is up a whopping 75,000%. And this right here, of course, is Nvidia's gain from 2000. We already went over that, so it's 74,000, 75,000, and this right here is from 2018. So just about 6 years ago. 6 years ago, we've seen Nvidia gone up a little bit over 3,174%. So these gains are just astronomical. I mean, one of the best performing stocks in the S&P 500 in the last several years and even decades, I should say, outperforming a lot of individual companies along the way, let alone the market indices. Now, Nvidia, this is what Professor Demodran said in that video, is that AI is the real deal. It is going to make a real difference to businesses. Nvidia is in a strange position right now. It is a great trade, but not a great investment, or to quote his words, I mean, it's a bad investment at these prices. Trading is all about mood and momentum. And he says, and I quote, "I don't think that I've ever seen a company celebrated as much as Nvidia. Jensen Huang is the greatest CEO to walk the face of the earth, and this company cannot be stopped. At least that is the perception." Now, the thing with momentum is that eventually the fever or the rush breaks, and the question with Nvidia is, when does that happen, right? It could still be a great company, but the pricing is a bit out of control, and all engines are firing off at full forces for Nvidia. So short term, they will beat their revenue and earnings targets, but they need to add an additional $400 billion in revenue to match their market cap value of $2 trillion, which is a daunting task, possible, but difficult, right? So as I've mentioned before, I mean, there's a lot of companies out there that you can argue are some of the best, greatest companies to have ever been created, but pricing comes into question. And as you invest more and more, as you invest in different types of asset classes and different types of instruments as well, you will quickly understand and realize that you can actually find very good, very solid, very great investments. But if they're not trading at the right price, or if they're not given to you at the right price, it's all the same, right? Because you wouldn't want to overpay for any asset in hopes of making money in the future, that somebody else would come around and pay you a higher price for it, because that at the end of the day is greater fool's theory. What you really want to do is, have a company, have a stock, have an asset that you are underpaying for, you're getting at a huge discount that can appreciate over time. And that's what Nvidia has done for investors that invested in, let's say, 4 years ago, 5 years ago, even 2 years ago, 3 years ago, even a couple days ago. I mean, because Nvidia has gone up, because this momentum is what's driving the stock price higher and higher. Fundamentals are solid, and that's what we're going to go over in just a minute. But it's really the mood and momentum that's been driving the price higher and higher. Now, some people may disagree. Some people may be like, okay, this is the greatest company on earth. Artificial intelligence is only getting started. We are literally at the beginning of AI, and Nvidia has a long way to go. I hear ya. I'm going to go over the entire analysis. I've got a whole spreadsheet to go over here, which I'll break down in just a few minutes. Now, coming over to the company's fundamentals here. So what you'll notice is that even though the price itself is up 3,174%, the revenue, or the earnings, I should say, are not up that much. I mean, it is up 300, 400, 500%, but they're nowhere near close to up 3,000 or 5,000%. So over here, what you've got, of course, is the actual growth in revenue and, of course, earnings. So we've gone from, $4.6, $4.8 billion in revenues to now $60 billion in revenue. So if you do the math here, 61, divided by, let's just do 4.7, we're looking at a growth of about 13 times, right? 13 times since 2015. In growth in revenue. That is fantastic, right? No doubt. That's absolutely exceptional growth here for Nvidia. But what I'm trying to say is the market cap growth, or the actual growth in price, has been significantly faster and more aggressive than compared to the fundamentals of the business. Revenue's gone up 13 times, or basically 1,300%, whereas the stock since 2018 is up over 3,000%, so 30 times, right? So there's a huge discrepancy there. And of course, not every time we're going to see that match perfectly, but historically, as you'll notice, the S&P 500 has given us an earnings growth of about 7 to 8% of all the S&P 500 companies combined, and the average growth rate in the actual price itself is also 7 to 8% over the last 100 years. Now, gross profit's gone from 2.6 billion to a little bit over $44 billion is what we are also seeing for in terms of gross profit from the income statement. So that, of course, is also about a 20 times growth in the actual profitability for Nvidia. And then if you come down to the bottom line, $759 million has now increased to almost $33 billion. Now that, of course, is a very significant growth also for Nvidia at the moment. So that right there is, again, no doubt, fantastic business, amazing company. We've seen just a tremendous amount of growth here in the overall business, but the price itself has obviously moved much faster, more aggressively compared to its actual fundamentals. Now, if you come over to the net income, so $631 million has now increased to 29, almost $30 billion here. So if you do the math there, this is, I think, actually going to be a little bit more aggressive in terms of net income growth. So we're looking at 29,760 divided by 631, and we're looking at 47 times. So 47 times is over 4,700% for profitability, and that's exactly what that's exactly what investors and analysts basically care about. That's bottom line profitability for any company, for that matter, if they're choosing to invest in that business. So again, fantastic growth. Now, markets are not backward looking, right? Markets don't care about what's already happened in the last, let's say, 10 years or 15 years. What markets care about is what's going to happen in the future, right? Markets are always forward looking, and that's exactly why I'm going to be going over this entire spreadsheet with all of you, which is going to essentially go over our base case, bear case, and our bull case scenarios for Nvidia. I'm going to plug in some numbers. I'm going to play around with these numbers a little bit so to better understand, okay, what could be the future potential for Nvidia long term. But we're going to come back to this in just a minute. Now, when it comes to the earnings expectations, growth expectations are coming down significantly, as you can see, that after 2029 all the way through 2030 and beyond, we're looking at a growth rate in the sort of low double digits to about mid double digits to we're looking at 11 to 12% here. And that growth rate in the first few years is very, very strong. We're looking at 91% growth this year, and then 20%, 19%, 23%. That's kind of tapering off over time. This is revenue expectations. So by 2034, $344 billion in revenue. I want you guys to remember that number because that's very important. That's what we're going to be using in our analysis when we go over to the bear case, base case, and the bull case scenarios for Nvidia as well. And this right here is going to be artificial intelligence worldwide. And the reason why I want to go over this is because that's some of the numbers we're going to plug in using these expectations here. So 1.8 trillion US dollars is the artificial intelligence worldwide market expected to be at by 2030. 1.8 trillion is a pretty significant number. Now, Nvidia in itself, the company in its investor day in March last year, mentioned that the total addressable market for the company is going to be worth a whopping $1 trillion spread across multiple verticals, such as automotive applications, AI enterprise software. We're talking about Omniverse, gaming, chips, systems. I mean, if you combine all the potential target audiences and addressable markets here, and we're looking for almost a $1 trillion market, addressable market for Nvidia. But there's more and more potential markets that are unlocking here for Nvidia's AI ambitions in medicine and healthcare are becoming clear. So last week, Nvidia announced deals with Johnson & Johnson for use of generative AI, with GE Healthcare to improve medical imaging. The healthcare developments at its 2024 GTC AI conference, which also included the launch of roughly 24 new AI-powered healthcare focused tools, demonstrate just how important medicine is to Nvidia's non-tech sector revenue opportunities in the future. And this was Raj Joshi, technology analyst at Senior Vice President Moody's, and he said, and I quote, "The reason why Nvidia is so popular today is because it's basically providing the plumbing and the technology for something that you could not do simply before, or if you had to do something like this, you would need probably several times more time, money, and cost. And healthcare, whether it's biotech or chemicals or drug discovery, is a very powerful area for Nvidia as well." Now, if you come back to our expectations, right? So the first thing that I've started off with is Nvidia's TAM, total addressable market. $1 trillion, I think, might be a bear case because Nvidia itself has mentioned $1 trillion as its total addressable market, but that was as of last year. As new technologies and new addressable markets come online with biotech and medicine and healthcare, along with overall generative AI market, if you look at, I think the bull case I'm going to put together is going to be close to $2 trillion, right? So $2 trillion is going to be the bull case addressable market. When it comes to the base case, let's just stick to 1.5 for Nvidia's base case expectations for total addressable market. Now, in terms of market share, another really, really important metric that we have to understand. Now, whatever I'm going over in this video, in terms of these kind of playing around with these numbers, please make sure that you understand that none of this is actual financial investment advice. We're just kind of estimating what Nvidia's fair value or price targets could look like in the future based on the addressable market, based on the market share that it captures, based on the margins that it has, and what could be the numbers in the future, right? So we always have to understand that. Now, market share, 30%, 40%, 50%. That's, again, based on the numbers from today. And then, of course, estimating on what it would look like. We're going to play around with some different numbers after the analysis is done to kind of show you how that changes, how the fair value changes, and how the price target changes. So 30% of $1 trillion, that's $300 billion in revenue. And this is by the year 2030, they're kind of estimating for. So revenue 2030. We're looking at $300 billion in our base case, $600 billion in our bull case, which is insane. $1 trillion in a revenue. That would be quite crazy. And I think this would be the most optimistic, most bull case scenario that I could ever think about for Nvidia. Like, this is literally, I could not think of a better, more crazy scenario for Nvidia than this. Even the bear case, I'm telling you, $300 billion of revenue is quite insane, because if you take a look at the net margins, Nvidia right now does 48% net margins, profitability margins. If you look at 50% net margins on $300 billion, folks, that is $150 billion in bottom line profit. And right now, there's only one company in the world that does over $150 billion in net income. That's Saudi Aramco. Again, Saudi Arabia and world's biggest oil producer, exporter, and of course, one of the biggest companies in the world. Also, the next biggest, most profitable company is Apple, 114 billion. So in order for Nvidia to actually, even in its bear case, we're looking at $150 billion, would be crossing Apple in profitability over the next 7 years. So that is quite insane. And again, I am going with some crazy numbers here just to give you an idea, just to give you a little bit of a sense of what Nvidia needs to do in order to justify the valuations today and what the future looks like for this company. Free cash flow margins we can kind of ignore because I'm not really going over the free cash flow discounted cash flow model here, but just for the sake of this argument, again, 35%, 45%, and 55% in free cash flow margins. This is going to be the free cash flow for the company. We're looking at over 105 billion, 270 billion, and 550 billion. And the growth rate, which by the way, if you take a look, growth rate for net income over the next 7 years, 26%. It's actually not bad. 26% is doable for the company. This growth rate is coming straight from the net income from last year of just under $30 billion. And if they grow the net income by just under 26% for the next 7 years, they're going to be able to hit $150 billion in profitability in net income. And based on the bear case, we're looking at a fair value of about $610 per share with a price target of $1,500. Okay, that's going to be, I would say, about 70% upside or 80% upside from these levels with a price target of 1,500 and a fair value of 610, which obviously is going to be lower than where it's trading at the moment at just over $970. In our base case, a $1.5 trillion market, total addressable market, 40% market share, and a 60% net margin, we're looking at a fair value of over $1,750 with a price target of over $4,000. And of course, in our most optimistic, crazy, out of the world bull case scenario, $2 trillion market with a 50% market share, $1 trillion in revenue alone, 70% margins here on net income, which is absolutely absurd. $700 billion. We're looking at almost a $4,000 fair value and almost a $10,000 price target. Now, this was just to satisfy all the crazy bulls out there. That's why I wanted to run through this analysis, because I know that somebody in the comment section is still going to believe this analysis. They're actually going to be like, okay, Caddy, you are right with this bull case. But guys, we have to go with the most possible outcome. Right? Anything is possible in the market, but we have to go with the most probable outcome. The numbers, how I would change these is essentially like this. 1 trillion, 1.2 trillion, and this is max 1.5 trillion. Okay? This is going to be my conservative bear case, base case, and bull case. So now that we've gotten the crazy part out, we can now start to look at a little bit more realistic and something that I would be looking at from Nvidia over the long term. Market share, I'm going to go with 30%. 35% and about 40% max. Revenue by 2030, I think this is, on a conservative basis, quite possible for revenues to hit 300 billion for Nvidia, or 420 billion in the base case and 600 billion in the bull case. Net margins, I'm going to go a little bit lower, so 50%. We're looking at 55%, and max 60% is the highest that I could see myself going for net margins on the bull case for Nvidia 7 years out. Then if you come over to the growth rates, again, growth rates are going to stay the same. And then, of course, the P multiplier, I'll have to go a lot lower. We're looking at around 18. We're looking at around 20. And we're looking at around 25, I should say, is about as reasonable as I can be on these expectations. So this is my personal conservative bear case, base case, and bull case, a more realistic bear case, base case, bull case for Nvidia over the long term, over the next 7 years out. And you'll notice that the bear case puts a fair value of 439, which is what I also had on a more conservative basis in my previous videos. Base case puts us as roughly around 750, which is also not bad, with a price target of over $1,800 7 years out, and a bull case of over $1,400 in fair value, with a price target of well over $3,600 for Nvidia. And that's only happening if Nvidia is able to capture 40% market share of a $1.5 trillion generative AI market, with a 60% net margin, which is, again, very, very high. If you go a little bit lower at 57%, and of course this one to be at, let's say, 53%, we're looking at a fair value of just under $1,400. But still, this is quite impressive from Nvidia. So let me know your thoughts down in the comment section below. I think on the day, Nvidia is still green. It's up another 2%, $962. So absolutely massive momentum for this company. So let me know in the comment section down below. What do you think about this business? And what are your thoughts on the expectations and the analysis that we just did? I would love to know from all of you. As always, make sure that you drop a like, subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us. And as always, happy investing. I'll see you all in the next video.